Welcome to the Crypto Channel, where we delve deep into the latest developments and insights in the world of cryptocurrency. I'm your host Josh, and in today's video, we're going to take a close look at Bitcoin, which is currently bouncing from a critical area of support. We'll also discuss a new short-term signal that has emerged, which could have significant implications for Bitcoin's immediate price action. Additionally, we'll explore Ethereum's recent behavior as it continues to consolidate sideways, a pattern that echoes past trends in the market. There's a lot to unpack, so be sure to stick around until the end of the video to catch all the details. Our goal here is to provide you with the most comprehensive analysis to help you make informed decisions in the crypto space. Bitcoin analysis, 4-day Bitcoin chart. Let's begin by examining the 4-day Bitcoin chart. Over the last 24 hours, not much has changed in this chart, which is a testament to the stability of the current price level. This stability can be both a positive and a negative sign, depending on the broader market context. If you're new to the channel, you might want to refer to my previous video where I did a thorough analysis of this chart. The 4-day chart is crucial because it provides a broader perspective on Bitcoin's price trends, smoothing out the daily noise and highlighting more significant patterns and levels of support and resistance. Understanding these larger timeframes is essential for identifying the long-term trends that could affect Bitcoin's future price movements. Moving on to the 2-day Bitcoin chart, we notice a continuation of the bearish trend that has been in place for some time now. This trend is characterized by lower highs and lower lows, a classic pattern indicating sustained selling pressure. The key support line is still around $532,000, a level that has held up despite the ongoing downtrend. Meanwhile, the resistance line remains at approximately $685,000. This channel of lower highs and lows suggests that the market sentiment is still cautious, with investors wary of pushing the price significantly higher. However, the support around $532,000 is crucial. If Bitcoin were to break below this level, it could signal further declines. The resistance around $685,000 is equally important, because a break above this level could indicate a reversal of the bearish trend. Therefore, these two levels should be closely monitored, as they will likely dictate Bitcoin's price action in the near term. Now, let's shift our focus to the daily Bitcoin chart. In the last 24 hours, Bitcoin has continued to bounce from a critical area of support, which lies between $56,000 and $57,000. This zone has been tested multiple times, and so far, it has held up well, preventing further declines. The resilience of this support area is a positive sign for bulls, as it suggests that there is still significant buying interest at these levels. However, should Bitcoin break below $56,000 and close below this level on the daily chart, it would be a cause for concern. In such a scenario, the next major area of support lies between $51,000 and $53,000. On the upside, resistance levels are plentiful. The first significant resistance is around $60,000 to $61,000, followed by $63,000 and then $64,500. The most formidable resistance lies between $67,000 and $68,300. Overcoming these resistance levels will be crucial for Bitcoin to reverse its bearish trend and move towards new highs. Despite the overall bearish trend, we have seen some encouraging signs on smaller timeframes. Specifically, a new bullish divergence has emerged on the 2-hour Bitcoin chart. This divergence, which has been confirmed over the past day, shows lower lows in the price action but higher lows in the Relative Strength Index, or RSI. A bullish divergence like this one usually indicates a potential reversal, or at the very least a temporary relief from the downward pressure. However, it's important to note that this signal is on a relatively small time frame, so its impact might be limited to a short-term bounce or sideways consolidation. It does not necessarily indicate a major trend reversal, especially since the larger time frames, such as the 2-day and 4-day charts, are still in a bearish configuration. Therefore, while this divergence is a positive sign for the short term, traders should remain cautious and not expect a significant upward move without further bullish confirmations. Now let's talk trading advice. For those of you looking to trade these moves in Bitcoin or any other cryptocurrency, I personally recommend using Bybit. Bybit is one of the leading cryptocurrency exchanges that offers a wide range of trading tools and features. making it an excellent platform for both beginners and experienced traders. Bybit also provides generous bonuses for new users who sign up using specific referral links. If you use the link provided in the description of this video, you can get up to a $30,000 deposit bonus, which can significantly boost your trading capital. This bonus is available only through the link below, so be sure to take advantage of it if you're interested in trading. Bybit's platform is user-friendly and supports a variety of order types, which can help you execute your trading strategy more effectively. If for some reason you are unable to access Bybit or complete the Know Your Customer process, there's an alternative platform called Bitflex. Bitflex is another cryptocurrency exchange similar to Bybit, but without the KYC requirements, making it accessible to a broader audience. Bitflex also offers a range of trading features and tools that are essential for anyone serious about trading cryptocurrencies. I've included a link to Bitflex in the description as well, so feel free to check it out if Bybit isn't an option for you. Both platforms provide excellent opportunities to capitalize on the price movements in the cryptocurrency market, and the choice between them depends on your specific needs and circumstances. The Bitcoin liquidation heat map is a valuable tool for understanding where liquidity in the market is concentrated. Over the past day, we can see that Bitcoin's price has moved into a significant area of liquidity, specifically around $59,800 to $60,200. This area has seen a lot of trading activity, with many positions being liquidated as the price approached these levels. Additionally, there's more liquidity to the upside, particularly around $62,000. These levels are important because they represent areas where large amounts of Bitcoin are being bought or sold, which can create significant price moves when these levels are reached. On the downside, there's a smaller pocket of liquidity just below $56,000, between $55,800 and $55,900. This suggests that if Bitcoin were to drop to these levels, there might be a brief pause or bounce due to the presence of buy orders. However, the majority of liquidity in the short term is still above the current price, which could indicate that there's room for a short-term rally if the market conditions are right. Another factor to consider is the funding rates across various exchanges. Currently, these rates are still below neutral, meaning that short positions are paying long positions to hold their trades. This is typically a bullish sign, as it indicates that the market is leaning slightly bearish, but the funding rates being below 0.01% suggest that there is still room for a move to the upside. When combined with the short-term bullish divergence we discussed earlier, this could result in a brief relief rally, or at the very least, a stabilization of prices in the near term. However, as always, it's important to remain cautious and not rely solely on one or two indicators. The cryptocurrency market is highly volatile, and multiple factors can influence price movements. Turning our attention to Ethereum, the second largest cryptocurrency by market capitalization, we see that it is still holding above a critical area of support on the weekly time frame. This support lies between $2,000 and $2,150, a range that has proven to be a strong floor for Ethereum in recent weeks. The fact that Ethereum continues to bounce from this support level is a positive sign for bulls, as it indicates that there is still significant buying interest in this price range. However, it's important to note that while Ethereum is holding above support, the broader trend is still somewhat bearish, with lower highs being set on larger time frames. This suggests that while the support is strong, the upside momentum is still limited, and Ethereum will need to break through some significant resistance levels to initiate a new bullish trend. Turning our attention to Ethereum, the second largest cryptocurrency by market capitalization, we see that it is still holding above a critical area of support on the weekly time frame. This support lies between $2,000 and $2,150, a range that has proven to be a strong floor for Ethereum in recent weeks. The fact that Ethereum continues to bounce from this support level is a positive sign for bulls, as it indicates that there is still significant buying interest in this price range. However, it's important to note that while Ethereum is holding above support, the broader trend is still somewhat bearish, with lower highs being set on larger time frames. This suggests that while the support is strong, the upside momentum is still limited, and Ethereum will need to break through some significant resistance levels to initiate a new bullish trend. On the 3-day time frame, Ethereum is still holding above the golden pocket area of support, which is located between $2,150 and $2,200. The golden pocket is a term used in technical analysis to describe the 61.8% to 65% Fibonacci retracement level, a key area where prices often find support or resistance. This level has acted as a strong support for Ethereum, preventing further declines. Above this, there is additional support at $2,200, which further reinforces the idea that Ethereum has a solid foundation in this price range. However, there are also significant resistance levels to consider. The most immediate resistance is at $2,800, a level that has previously acted as strong support but is now serving as resistance. Beyond that, there's another resistance level at $3,200, which is a critical psychological barrier as well. These resistance levels will need to be overcome for Ethereum to continue its upward momentum, and until that happens, we may see more sideways consolidation or even a potential retest of the support levels. In the short term, Ethereum's price action on the 4-hour time frame suggests that we may be in for some sideways consolidation over the next few days. This consolidation is similar to the price action we saw during the March 2020 crash, where Ethereum moved sideways for a while before resuming its upward trend. The current price action is characterized by small fluctuations within a narrow range, with no clear direction. This lack of direction could be frustrating for traders looking for significant price movements, but it also presents an opportunity for those who are patient. Sideways consolidation often precedes a breakout, and when it happens, it can lead to significant price moves. Traders should keep an eye on the support and resistance levels we've discussed, as a break above or below these levels could signal the start of a new trend. Finally, let's take a look at Solana, a blockchain platform that has gained significant attention due to its fast transaction speeds and low costs. On the daily time frame, Solana is currently struggling to hold onto a critical area of support between $140 and $144. This support zone has been tested multiple times, and while it has held up so far, the recent price action suggests that the pressure is mounting. If Solana fails to hold this support, the next area of support lies between $120 and $128. A break below this level could result in a more significant decline, potentially pushing Solana down to $100 or lower. On the other hand, if Solana can reclaim the $144 level and hold above it, it could start to move towards the next resistance levels at $159, $170, and $183. These levels are crucial because they represent areas where previous price action has encountered resistance, and overcoming these levels would be a positive sign for Solana's short-term outlook. Finally, let's take a look at Solana, a blockchain platform that has gained significant attention due to its fast transaction speeds and low costs. On the daily time frame, Solana is currently struggling to hold onto a critical area of support between $140 and $144. This support zone has been tested multiple times, and while it has held up so far, the recent price action suggests that the pressure is mounting. If Solana fails to hold this support, the next area of support lies between $120 and $128. A break below this level could result in a more significant decline, potentially pushing Solana down to $100 or lower. On the other hand, if Solana can reclaim the $144 level and hold above it, it could start to move towards the next resistance levels at $159, $170, and $183. These levels are crucial because they represent areas where previous price action has encountered resistance, and overcoming these levels would be a positive sign for Solana's short-term outlook. The current trend for Solana is still neutral to bearish, with the price action showing signs of a larger consolidation pattern. This pattern is typical in markets where the previous uptrend has exhausted and the price needs to consolidate before deciding on the next direction. For Solana, this means that while there is still potential for upside movement, especially if the broader cryptocurrency market starts to recover, traders should be cautious. The market sentiment is still uncertain, and without a clear breakout above the resistance levels we've discussed, Solana could remain in a range-bound state for the foreseeable future. As always, it's important to monitor the price action closely and adjust your trading strategy accordingly. As we wrap up today's video, it's clear that the cryptocurrency market is at a critical juncture. Bitcoin, Ethereum, and Solana are all showing signs of potential short-term relief, but the larger trends are still somewhat bearish or neutral. This means that while there are opportunities for trading, especially in the short term, it's essential to remain cautious and not get overly bullish without additional confirmation. For those looking to trade, platforms like Bybit and Bitflex offer excellent tools and bonuses to help you capitalize on these market movements. Don't forget to check out the links in the description to take advantage of these offers. If you're interested in learning more about trading strategies for different market conditions, be sure to check out some of the other videos on the channel. Thank you for tuning in, and I'll see you in the next video. Until then, happy trading.